Everyone to Global FX Radio webinar series for premium members only. October 19th, 2008. I'm your host, Andrew Spanton. Today's webinar, we're going to be talking about trading on the news. You see before you the Euro-US dollar chart over the last 5-minute bars from last Friday's close. And trading on the news, in my 7 years of experience in foreign exchange, has its ups and its downs. Meaning, there are times, months, maybe years, where news stories drive the market, where you get clean moves, and it's almost like easy money trading on news. And then there are periods of time, as in the last 2 years, I would say, where trading on the news is much more straight up and straight down, and much more whippy, and even reversing on such news, making it very difficult. If you're a news trader, it's more identifying when to trade the news. What economic data is that country, what is the market focused on at that given moment in time? For example, in the U.S., we know there's a housing problem. We know there's bad numbers coming out of the housing market, but we don't know about other areas of the economy. Retail sales, consumer confidence. So when the market is already discounting an industry or a part of an economy that is not doing well, then you tend to get, the market discounts it, and what happens is you get reversals. For example, this is the Euro-Yen pair, we're looking at, and last Friday we had economic numbers coming out of the U.S. The futures were selling off and the carry trades sold off in Europe. And then we started to rally, but we were still rolling over. This was an 830 number. Now the Euro-Yen trades correlation with the Dow Jones and the S&P Futures 500. There's a direct correlation. So to trade the Euro-Yen, a lot of news traders trade the Euro-Yen based upon the Dow. And we see here the 5-minute bar. When this number came out, it was an absolute sell on the news event, meaning you buy you sell the yen. You may have been long the yen going into a negative event, thinking, okay, the number's going to be bad, the futures will go down, and sure enough, look what happened. You had a little spike down on the bad housing data, came out much weaker than expected on Friday morning, and then, of course, it ripped in your face. In your face. Now, a news trader might have even been stopped out, taking out this level here. That's called a reaction high. Very significant. When an event comes out and your pair continues to make new highs against that, this is really the reaction high, right here. And then even makes another reaction high above this candle. Very dangerous. Never really got there. And it turned out to be a good area to short, which is what usually happens in trading news trades. There is no need in today's market, in October 19, 2008, to chase a trade. It doesn't really work these days. There are times when it does. There are times when the number's so horrendous that I guess the market does, the futures do fall. But trading the news requires so much discipline. Because when you get a situation where, like in this one, where you make a new reaction high since the number came out, the market's basically telling you it's discounting this event. And here you see another 60 pips. The market would have gone up against you if you had not gotten out in this reaction high. If anything, a good news trader is part psychologist, in my opinion. Because you have to be able to read the tea leaves. You say to yourself, all right, well, what has the market done into this event? This is supposed to be a bad event. The U.S. is going to have bad housing numbers, and the U.S. is going to have bad consumer confidence. The futures should probably reverse. I think the night before we had IBM strong and Google strong, or Google and the futures were up in Asia, and there was even a trade there on that. But sure enough, we rolled over. The futures weren't higher. I think I had even thought the futures would be higher, but they weren't. And then we came into a situation where anticipation of this bad number did cause the market to go down. So the news trader is more anticipating the bad news story, looking for opportunities. All right, well, there's going to be a bad news story coming out. This now all of a sudden crossed the downside, took out this low here. Looks very bad. Rolling over. Oh, shoot. I'm going to look to short. And he bounced. Maybe going to bounce up to here. This became resistance, right? We rolled over. It bounced up to even here. Perfect spot. 10, 20, 30 EMA. Perfect spot. So the futures kept going down. Maybe some bad stories came out. I forget. Now all of a sudden we started to rally. Now all of a sudden you're saying to yourself, well, the stories coming out should be a negative event. Do I really want to be short down here after it's just come out from 137? Do I really want to be short? If anything, and again, looking at the stock market is crucial. The stock market had rallied the day before, made a comeback, so there was a little bit of giddiness. Maybe the stock market looked better that day. And the market also knew that there would be a negative event coming out as well. Yet the futures did not crash. So the fact that the stock market was holding its own, the market was sort of telling us, in conjunction with the yen, holding this level. And now all of a sudden we have a bad number that comes out. Now we have Michigan sentiment coming out at 9.55. Notice what the market was doing ahead of Michigan sentiment, which who in their right mind believed that this would be a bad number? But the market was doing something that didn't make sense. And as a news trader, you must be identified. You say, wait a second, the market, you or you just rallied here when a bad number is supposed to be coming out. This doesn't make sense. The futures are starting to tick up. The stock market is starting to, now all of a sudden the stock market starts to come back. You see what happens over here. You might be staying with your short. The stock market did sell off. Point is, if you were short down here from the event, you're losing money. You were getting killed. You got lucky, you got even. Now, I'm not saying that to be short, to pick your spots. I mean, listen, the news story came out at 135.50, and it got as high as 136.30. That's a 90-pip move. So you certainly can make money if you have the patience to wait. A lot of traders, though, what I'm saying is they hit the bid. Bad news story, sell. No matter where the market is, just sell. That's not the way you trade the news in today's market. You watch it. You let it percolate. You see how the market's reacting. A lot of traders will not make any trades for 10, 15 minutes until after a big story, a news event comes out. I don't necessarily agree with that, but I think it's more the charts. You know, if something makes a huge move, that's ridiculous. You have a good entry. Absolutely take advantage of it. But my point is that when you look to trade the news, it is so important to look what the market has done before the event. And there'll be times when the market's doing something that does not make sense at all. Let's say a bad GDP report is supposed to come out. Everyone knows the U.S. GDP is going to be terrible, but for some reason the dollar's up. Maybe the dollar had been down a couple of days. And now for some reason the euro's up 100, dollar's up 100 pips against the euro. You know, euro dollar down 100 pips. That doesn't make sense. Then the bad report comes out. And then it makes new lows. Those are the idiots getting it. And then it rips in your face. The smart money is taking their profit on the news, selling the news. Same situation when you have, let's say, a major event, non-farm payroll, let's say, coming out, and the dollar's been getting hit day in and day out in anticipation of a terrible number. And for the week, the dollar, let's say, is relatively very weak. Let's say down 300, 400, 500 pips against the euro. And then the bad news story comes out that everyone was expecting. Then there's a vacuum of sellers. And it's a reversal on the event. Everyone's short the dollar. Everyone looks to cover. Dollar rallies on a dollar negative event. So very important to see where the world you are for the week, see how big the event is, obviously, and see where you are going into the event and trying to get the market psychology and not chasing the trade. If you miss it, so what? You'll get a bounce. You'll get a sell-off. Andrew Spanton, Global FX Radio, Trading on the News webinar. Hopefully it was a little help. Have a nice day.